Make sure not to miss this video if you want to identify price reversal points and enter trades at the moment of price reversal. In this video, you will learn a complete setup for trading with pivots and how to find precise price reversal points. This setup is one of the most accurate trading setups, and if implemented step by step, you will earn significant profits from the market. This setup is exclusive to the BPM trading style, which is the newest and most up-to-date trading style. At the end of the video, I will share additional tips related to this setup that you probably have not heard before. So before we begin, please subscribe to our channel to not miss out on future videos. And don't forget to like the video and share it with your friends. See you after the disclaimer and intro. Welcome back, traders. So let's get started. What is a pivot? In the classic style, when the price is moved at least the equivalent of 3 candles, and after the formation of a reversal candle, moves back in the opposite direction with the same conditions, we will have a reliable pivot or turning point. After the price returns to the pivot area, we can enter a trade. However, in our style, it is not necessary to wait for the price to move away from the pivot area. We establish rules so that firstly, you can enter a trade after the formation of the first or second reversal candle. That means entering a trade at the moment the price reverses. Secondly, you can identify the pivot points on the time frame and enter trades based on your trading strategy, whether you are a scalper, day trader, swing trader, or position trader, with the pivots of that time frame. In this way, both the duration of forming the trading setup is tailored to your strategy, and the time to reach the target, trade waiting time, duration of being in a losing position, and time to return to a trade are proportional to the time frame of your strategy. Now, let's explain step by step how to set up trades in the moment using pivots. Step 1. We must have one leg in the structure time frame. Imagine we are in a 1-hour time frame and waiting for a 1-hour pivot to form to trade with it. In the first step, a 1-hour leg must be formed. Now we need to answer the question, what is meant by a leg? Whenever the price moves by the size of 3 standard candles, we have a leg. As we have explained in previous tutorials, a standard candle corresponds to a length of 80 to 120% of the ATR of the respective time frame. Therefore, the price must move at least 240% of the ATR of the 1-hour time frame, and at most, a few pips less than 240% of the ATR of the 4-hour time frame. When we say the price must move by the size of 3 standard candles to have a leg, this is a definition, and in the chart, it is very unlikely that the price will exactly form 3 standard candles in a row, as market movements are usually full of noise. Therefore, we should use measurements. When the price moves at least 2.4 times the ATR of any time frame, it forms a leg related to that time frame. 2 important questions are raised here. 1. Should we consider the beginning of the leg from A or B? We have a general rule for identifying a leg. If we have a reversal greater than the ATR of that time frame in the price movement path, we should consider the beginning of the leg from the end of the price reversal. Here, the upward movement before point A is greater than the ATR of the respective time frame. So we should consider the beginning of the leg from point A. However, the price reversal to point B is less than the ATR of the time frame, and we consider this reversal as noise. The price reversal to point C is greater than the ATR of the time frame, so the length of the leg is equal to the distance from point A to D. 2. What should be the length of the leg related to the desired time frame? Suppose we are in a 4-hour time frame. The 4-hour ATR is 10 pips, and the daily ATR is 25 pips. To have a 4-hour leg, the price must move at least by 240% of 10 pips, and at most, a few pips less than 240% of the daily ATR, meaning it must move at least 24 pips, and at most 59 pips. Step 2. In this step, we need a reversal that is at least the size of the ATR, average true range, of the corresponding time frame. Before that, a few important points should be mentioned. 1. It is very important to examine the formation of the pivot candle that has created the latest high or low, because the size and shape of this candle will have an impact on the examination of the pivot formation. Consider the candle that has made the latest low in the image. This candle can have several different states. As explained earlier, this candle can be a spinning, standard, long bar, or spike. 1. If this candle is a standard candle, in which the body or shadow accounted for 80% of the total length of the candle, we call it the master candle, and to form a pivot, the return candle must close above the high or low of the master candle. Assume the ATR is 10 pips. For the candle to be standard, it must have a length between 8 to 12 pips. For a candle to be considered a master candle, it must have 80% of its length as the body or shadow. This means if the length of the candle is 9 pips, at least 7 pips of it must be the body or shadow for us to consider it a master candle. 2. If the candle is standard but not a master candle, or it's a long bar, spike, or spinning, a hypothetical line should be drawn. This hypothetical line is drawn at a distance of the ATR of that time frame from the end of the leg. If the price closes above this line, a pivot is formed. However, for successful trading, there must be other conditions as well. In the description of the video, I provide the link of our previous video about categorization candles based on their length. Then, we will continue with the next points. 2. The coverage of the intended area should occur within a maximum of 2 candles so that we can enter a trade at the moment of price reversal. If this coverage occurs from the 3rd candle onwards, a pivot is formed, but we cannot use a stop at the moment of entry. 3. If the coverage does not occur in the 3rd candle, we have a base pivot, and we will teach how to trade in base pivots in the upcoming videos. Step 3. The price must engulf the snag in the last third of the leg after covering the last candle of the leg. That is, it must penetrate on the other side of the snag. We will provide detailed training on trading snags later, but here is a brief explanation. Snags are areas where there is a concentration of orders and are usually in the form of pullbacks. However, not every pullback should be considered a snag. Snags are formed by price stalling with consecutive candlesticks, and wherever we have at least 3 consecutive stall candlesticks, we will have a trading snag. Of course, not all trading snags are significant to us. When a trading snag is penetrated, there are no more orders in that area, and the price will move away from it. This is because if big platers had orders in that snag, they wouldn't allow the price to move away from that area. We will provide comprehensive training on finding precise trading snags in the future. For simplicity, you can consider the shadow of 2 consecutive candlesticks in the last third of the leg in the main time frame, and the pattern time frame as the desired trading snag. In other words, first, in the main time frame, we look for this snag in the last third of the leg. If it is not found, we move to the pattern time frame and find the desired snag there. Usually, if we go to a lower time frame, like trigger time frame, to find a trading snag, we may not be able to find the correct snag because there are many pullbacks and snags in that time frame. Step 4. Draw a golden box. To draw the golden box, consider an area from the pivot tip to the area that has been covered and is important to us. If the candle that formed the lowest lows or highest highs was a master candle, the covered area of the master candle is considered. Otherwise, the hypothetical line is important. Divide the specified range into 2 equal parts and enter the trade when the price enters the upper area. This box is the approximate range of the FTC snag, meaning the failure to continue due to the formation of pivots. FTC areas act as a shield that protects the pivot. In the upcoming videos, these areas, which are part of the supply and demand zones, will be fully explained. Step 5. Enter the trade when the entry trigger is activated. Your entry trigger can be indicators, oscillators, or drawn triggers. However, the entry trigger we use in most of our trades is the trigger line, which we have fully discussed in a video. We will put the link to the video in the description. Step 6. Determine the stop loss and target. In this style, we determine the stop loss and target based on the trigger timeframe ATR. This means the stop loss is equal to the trigger timeframe ATR, and the target can be considered as 1, 3, 7, and 15 times the ATR of the trigger. In the future, we will provide complete training on determining stop loss and target systems. At this step, you should also pay attention to a few things. 1. You can trade in the FTC area up to 3 times. After the price hits the FTC 3 times, do not trade with this method again. 2. The price return to the FTC area should take at least 7 candles of the time frame of the structure. If it takes more than that, you should not trade with this method anymore. Important additional notes. 1. Using the method mentioned, you can trade and be profitable. However, in the future, we will provide more detailed explanations of the mentioned points. 2 pivots come in 3 types: reversal, pullback, and settlement. For successful trading, you should trade with reversal pivots. 3. There is a type of pivots called explanatory pivots that do not require a covering candle, which will be taught in future videos on trading with them. 4. There are 2 ways to trade with pivots. The first method involves trading at the moment with pivots, and the second method involves trading in the future on pivot levels. Well, traders, this episode has also come to an end. In the next videos, more examples and explanations about pivots and how to trade with them will be presented. Please like our video and leave your comments.